Is the bull market back? Well, we'll have to see, because I think looking at Bitcoin's price, it does seem to indicate that that could be the case. We also do see some other things, particularly with the M2 money supply and some of those other types of things looking particularly bullish. But then we also do have some other things more in the macro economy that are not looking particularly great. So I want to dive in and discuss all of these different things as we get started off on another crazy week of crypto trading, of course, no doubt. And so we're going to go in, we'll dive in and we'll discuss all the different types of macro, micro, all that type of stuff. So starting out though, I want to talk about a news article that's talking about a US recession in 2025. Now, of course, we have been seeing Bitcoin move to the upside. We'll be talking about that in more detail just here in a second, but I figured it would be good to start out with kind of some of what we're seeing from the economy, because of course, I do think a lot of what's happening, particularly with alts, maybe not necessarily for Bitcoin, but particularly for alts, a lot of this does depend on what we see out of the economy. And so we can see here a US recession in 2025, betting odds say it's more likely than not. So we can see this was about 6 days ago, so on April 14th, we can see that at that point in time is about a 56% probability of such an event occurring, such an event being a recession. And then we could see it was actually at 66% about a week before that. Of course, you know, this was getting close to kind of like the Liberation Day and all the tariffs and all these types of things, a lot of that announcement coming in. So things have kind of started to settle a little bit since then, which I do think is good. We also can see this is kind of like the current widget. The current widget is showing at a 60% chance, so odds have gone up a little bit since we've seen that. As we've saw with the US election, we've seen really quite frequently over the past probably 12 to 18 months, betting markets are usually pretty good because, of course, people are putting their money on this. And so, you know, if we are seeing a 60% chance being kind of priced in here, I do think that this is not something that we should be discounting, definitely should be taking seriously. And that does, I think, in my opinion, impact how we should be viewing the crypto market as well. Now, of course, we'll be getting into that here in a second. I just want to focus on kind of exactly what we're seeing within the macro environment real quick. We can also see CEO confidence hits post-COVID lows. We saw that it actually fell down from a 5.0 to a 4.6. This is on a scale of 1 to 10. Now, of course, you know, 5 isn't a particularly glowing review to begin with, but again, it is continuing to go down, which is not particularly great. So we are seeing that the overall economy people aren't particularly bullish on where we're at. Now, of course, you know, usually we could say, you know, the market climbs up a wall of worry. So maybe the fact that people are so scared means that we might actually be able to see the market turn relatively quickly. But again, at least right now, there is a very strong bit of pessimism within the market right now. Part of this is fueled, of course, by the tariffs. You know, I think that's the thing that's kind of causing the most heartache for everybody. But then we also can see some of the printing or the high interest rates, things like that. If we do look, we can see here we have the CME Fed watch on the 7th of May is kind of like the next Fed meeting where they decide on interest rates. We can see here the current target rate is 425 to 450 basis points, which is about 4.25% to 4.5%. There's an 87.6% chance, at least by the estimations of the CME group, there's an 87.6% chance that essentially interest rates will remain unchanged, and there's about a 12.4% that they'll actually be cut by a quarter. Now, if we go further out to June, it does actually appear more likely that interest rates are going to be happening in June. Now, if we go back to the article, we can see that there was a level where they were talking about that this could essentially it could spike the chances of interest rates being cut as early as next month. Now, of course, that is not based on what the estimations say. It looks like June is kind of where we're being priced in for kind of that first rate cut. So again, zooming out, big picture, what does all this mean? Of course, I did just throw a whole bunch of data at you, but what I think kind of the two big takeaways are here is it is becoming more and more likely that a recession is going to be happening in 2025, at least based on betting markets and the overall sentiment of the market. We can also see the sentiment of CEOs is also continuing to drop. So the future outlook for the markets is continuing to get worse. And we can also see from the Fed watch, likelihood of an interest rate being cut in May, unlikely at this point in time. likely in June. So we might be kind of waiting a couple months until we start to see interest rates getting cut. Now, however, if we do go back and we look at the Bitcoin chart, we can see that this, at least as of right now, does not seem to be impacting price. We have seen, of course, this descending trend line. This was several months of selling, getting pretty low, almost breaking this key level of support. We, of course, did not. We have since seen a run back up. We've seen two pretty important things happen on the Bitcoin chart since then. And the first one is we did, of course, break above this descending trend line, which is a really big deal. We'd seen multiple times over the past several months where we had tried and failed, but we had actually gone through that. And then, of course, we had this kind of big, this big level of, I would say, like a high volatility or high volume. We can see in all of these areas, lots of wicks kind of both up and down. We could see we'd been getting stopped out in this area for over a week at this point. We could see 8 days ago is kind of the first day that we kind of popped up into this zone. And now, at least for now, we have broken above this. If we close above it, now that of course is a different question. Only time will tell there. I think a lot of this is going to depend how the market opens when the U.S. markets open on that Monday, because this is technically Monday because this runs a little bit ahead of where we are in the U.S. And so I do think, a lot of this is going to be impacted by what we see going on Monday's trading. We can see for our RSI here actually peaking above average, not anywhere close to overbought or anything like that, but we are starting to kind of move up a little bit on RSI. I do think this makes sense just given the past level of buying that we've seen over the past probably 2 or 3 weeks, looking pretty good. And then if we do look at the Bollinger Bands, we're getting close to the top of this Bollinger Band, so we might be running into some little bit of selling pressure potentially. But of course, again, breaking and closing above this zone would be a really good thing to see. Time will tell, of course, right? And so, of course, this is really what we're trying to wait on. I think Bitcoin overall, given the relatively pessimistic economic data that we are seeing, still not necessarily impacting Bitcoin too negatively yet. I was actually quite the opposite. Now, of course, if you are interested in trading Bitcoin, Ethereum, Solana, any of these types of things, I do have those links in the description below. BTCC, WEEX, and Phemex as well. BTCC is giving you that 10% bonus on first-time deposits, as well as up to $10,055 in trading bonuses. And then WEEX, I believe, is doing 20 or 30,000 USDT in trading bonuses. And then Phemex does have that 4,800 trading bonus, as well as that grid trading bot, which I do think is a super cool thing overall. So of course, we can see that in this market, Bitcoin has been holding up relatively well. If we do look at the crypto bubbles, we can see on the day things looking pretty good overall. I mean, obviously, we do have some reds here and there, but very clear to see that, definitely more green than red on the page here. And if we look at the week, we can see also starting to look a little green here as well. Of course, same type of thing on the weekly as well. We have some reds here and there, but overall, definitely more green than red. It looks like, we've got Fetch, we've got Tau, we've got Render. It looks like AI might be seeing a little bit of resurgence. We've got Graph down here as well. I mean, AI had a pretty rough run over the past, probably several months or so. And so we are starting to see some of these, kind of come back a little bit, which could mean we could be on the very kind of beginning end of another AI run. Again, potentially, who knows for sure. If we do look at the month though, still a bunch of red everywhere. We are starting to see a little bit of green kind of climb back in here and there, but definitely still a bunch of red. Still, I would say, maybe a little bit more bearish bias market, particularly for alts. Of course, Bitcoin has done relatively well. We can actually see, I think Bitcoin, is right here, 3.3% of the month. So not too bad, but we're seeing others like ETH down almost 20% on the month, which not particularly great. One thing that we can use to monitor this though is the Bitcoin dominance. And if we do look at the Bitcoin dominance, we still have this trend that has not been broken. So I want to show you two things. The first thing is we do have this trend line that we've essentially been following ever since, when was this? Like the beginning of 2024. So this has been an uninterrupted trend for about 15 months. I guess I shouldn't say uninterrupted. We did have kind of this, mini alt season, I guess we could call it, in November and December. That's when this did really kind of fall off a decent bit. But if you've noticed, actually, since then, we can even draw a steeper trend line that has actually been following relatively closely since then. So an even steeper slope, and it has continued to kind of follow this. It did look for a point where we may actually be breaking below this trend line, but then it did come right back up, and we are continuing to follow this all the way kind of up and continuing. So, it's hard to say for sure exactly when this will stop. Generally, kind of the litmus test for when we see an alt season is we start to see Bitcoin dominance start to fall down. We have not seen that at all yet. It just kind of continues to go up, and we can see this evidenced by the altcoin season index. We kind of just barely creeped into that altcoin season, kind of exactly when we started to see this pull down. But if you look now, we had a little bit of kind of some bouncing around in the middle, and then basically ever since the beginning of March, we have been fully in Bitcoin season ever since. And I think that makes a lot of sense. In my opinion, there's a pretty good reason for this. And this is something that I don't think a lot of people like to talk about, but it's something that I think is very important to note, because this is kind of saying the quiet part out loud, at least in my opinion. If we do take a look at this, this is a tweet from Ansem, but this is something I've started to kind of see a lot more just generally from people, and things that I've been picking up just from conversations with people in real life when I go to conventions and things like that, people that I see talking on Twitter, people I see talking in the YouTube comments, other influencers, a lot of this type of stuff. A lot of people I think have generally the same type of sentiment. Here we can see it says, historically it has not been proven that you should hold any altcoin outside of Bitcoin for several years. 99% of all alt BTC charts make lower highs cycle to cycle. However, the best method for stacking BTC or USD during bull markets is by trading the strongest alts during trends. So again, simplified, what this means is trade alts, hold Bitcoin, right? And I think over and over, this is becoming more of the theme for everybody. And this is why I don't think we're seeing things do 50x, 100x, just mega runs. And now some of you may have the claim or the counterpoint that we aren't really at that point in the cycle yet, in which, yes, I would partially agree with you. But I also do think as the market becomes a little bit more sophisticated and a little bit more educated on what they're doing, I don't think we're going to see, it just doesn't seem to me that there's any level of belief in any particular alts. And ultimately, when you're going to see an alt do crazy numbers, there does, at least to some degree, need to be a level of belief. And I just haven't really seen that happen over at least this cycle so far. It's been a lot more kind of, zero sum, people, again, trying to trade in and out of alts to go stack more Bitcoin. And so I think that this is a very, very important piece that we can't just glaze over, is the fact that the market might be changing. And if the market is changing, we need to at least keep up with this and make sure that we understand how best to succeed in this type of market. And now, in my opinion, if this is going to be the institutional cycle, maybe the best thing is what seems to be the most boring and simplest thing, which is just stack Bitcoin, DCA, stack it. Of course, none of this is financial advice. You, of course, do need to make your own decisions and a lot of that type of stuff. But this is something that I have been thinking about a little bit more over the past weeks and months, as I start to see more and more people, like when they make these offhanded comments of, well, people trade alts to hold Bitcoin. If everybody's doing that same thing, there's not going to be that level of belief that these alts can actually do whatever they say they're going to do. There's going to be a generally larger level of cynicism, which in my opinion is going to kind of cut some of the cap in which they could rise. Again, that's just my opinion. I could be wrong, and it could just be purely because we're not at that time in the cycle. And if we want to kind of go down that path and we want to discuss that a little bit more closely, we can see here, this is a chart of global money supply. And I want to dig into this a little bit because I've talked about this chart specifically a little bit more, with people kind of a little bit closer to me. And I wanted to be very clear as to, this chart is a little bit misleading. And I think a little bit misleading in a good way, meaning that the information we're seeing here is actually better than what it looks like. So let me just get rid of my picture here so you can see the full chart, because we need to be able to see the timelines here. So if we look at the US M2, we can see we're close to all-time highs. However, if you look at this, this is over a 10 to 15 year time span. It probably starts at maybe 2010 and it goes all the way to 2025. So you can see this increase in M2 realistically was leading up to the 2021 bull run. So all of this is really a net zero since 2021. So the US realistically has not actually added much to their M2 money supply since the 2021 bull run. Now that's important to note, because even though this is looking like M2 is going up, it's really not in a tangible way for us right now, right? However, if we do look at Japan, we can see that this is actually the opposite. 2021 starts at about right here-ish, and we can see since 2021, their M2 money supply has continued to rise. Now, China will come back to, just because this is like the most extreme of extremes, and we'll come to Euro M2. We can see here all-time highs. And if we do look, this is July of 2024. So basically in the past 8 to 10 months, we have seen them go from about 15.24 trillion to about 15.64 trillion. Now that's not a huge increase, but it is a huge increase relative to what we've seen in the past. And this still is about, what is that, 400 billion roughly. So money is coming into the system, but not at extreme rates. Now, the reason why I go back to China is because we can see here, this is about the beginning of 2025. The beginning of 2025 saw them at about 309.5 trillion. They are sitting closer to about 326.5 trillion, which gives us, what is that, about 17 trillion printed in about the past 3 to 4 months. I mean, that is an extreme amount relative to what we're seeing out of all of these other countries. Now, this does bring kind of a little bit more of a larger narrative here, which is exactly kind of what I had mentioned here in my X post, which is China is effectively trying to print their way out of their debt crisis. For those of you who don't know, China is in probably a worse economic position than the US is, even though it may feel like the US is not in a particularly great position. China is in an even worse position, and it's fairly clear to see with their M2. I mean, they're effectively trying to print their way out of it. Whether this works or not, who knows for sure, but I think that this is very important, because if we start to see China turn on the money printers and maybe they're devaluing their currency relative to others, maybe other countries are going to be kind of devaluing their currency relative to keep the trading pairs similar. Hard to say for sure, but also as we start to see tariffs bite, and maybe if the Chinese economy collapses, the Chinese economy is large enough that it may not have the same impact that like the American economy collapsing would have, but it still would have an incredibly massive impact because they are that important in the world at this point. And so I do think it's very, very important to realize what is actually happening here and how this could impact crypto. So again, my kind of thesis, I believe, kind of remains the same in the sense that in the next 6 to 12 months, we may not actually see particularly great conditions for crypto. In that point in time, I do think Bitcoin, it continues to prove that it is very durable and it holds up very well. So Bitcoin might be the best place to be until we start to see some better macroeconomic conditions, because even in these relatively unstable macro conditions, it does look that, and it does appear that Bitcoin will continue to hold up. It's done very, very well so far. Altcoins, however, completely not the case. Altcoins are getting pretty much crushed. They've not done well at all. And so I think as we start to see, or as we continue to see, the increasingly pessimistic views on the world and US economies continue to come in, I do think that this is going to continue to be bad for altcoins. Now, however, we can see what's following right now. There are essentially the money printers being turned on worldwide. And this is a good thing for crypto long term, because again, this does continue like the debasement of fiat currency. This is going to continue to increase the value of Bitcoin specifically, and by maybe the wealth effect, potentially kick off an alt season and do all that type of stuff as we have seen in the past. Now, again, as I mentioned, with some of the kind of the attitude shift within the crypto market, we may not see that, right? Just because people are a little bit more skeptical and they value Bitcoin, and everything else is kind of a way to acquire more, right? And so I think we could see potentially more limited versions of alt seasons, but it's hard to say. So again, I'm not really sure I have an answer here. I'm trying to be prepared for both outcomes. One of those being a really crazy alt season, and one of them being maybe not really an alt season, like a 2021 type alt season, but one that's good enough to get people a little bit excited. And then of course the profit taking is just going to start a little bit earlier because people are far more interested in stacking Bitcoin. So anyway, that's what we've got today. Hopefully, we'll see how things kind of shake out over this next week. I'm sure it's going to be a wild week. It's going to be volatile. A lot of what actually is going to be happening in the markets is going to massively impact the crypto market, of course. And so anyway, I'll be there to cover it all. If you did like the video and you found the information useful and helpful, of course, a like and a subscribe really, really does help me out. If you have any comments, thoughts, feelings, anything like that, just drop them in the comment section below. I do read and respond to all of those. So if you have anything you want me to see, that'd be great. Thank you guys for tuning in, and we'll see you in the next one.